The following audio recording has been designed for learning purposes only. Do not share, distribute, or provide any type of copies, or this audio lesson will not be made available to you. Good luck with today's lesson.
Okay, now we're ready to discuss Chapter 42, which deals with LPs, LLCs, and LLPs. Historically, limited partnerships didn't exist at common law. They were entities created by modern statutes. Limited partnerships were governed under the Uniform Limited Partnership Act, which has been revised. Every state but Louisiana has actually adopted the version of the revised Uniform Limited Partnership Act. So what really are limited partnerships? Limited partnerships are special relationships formed by two or more persons who have one or more general partners and one or more limited partners. The general partner is a partner who assumes the management responsibilities and will have full liability for partnership debts, whereas the limited partner is a partner who makes a contribution of cash or property, but they will not have an active role in management, and they will have limited liability for partnership debts. A person may be both a general partner and a limited partner. Now, generally, the limited partnership may carry on as any business which a partnership could carry on. A limited partnership is often created to provide tax shelters for persons in higher tax brackets. So what are the requirements for forming a limited partnership? There are: the partners must execute a certificate setting forth the character of the business and the location of the principal office, the name and address of each partner and its capital contribution, a designation of which partners are general and limited, and finally, the respective rights and priorities, if any, of the partner. It must also include a copy of the certificate that is filed, and a copy of the certificate must be recorded in the county of the principal place of business. Now, we previously mentioned the limited partners will limit their liability on partnership debts, whereas general partners will have full liability. The limited partners don't have any personal liability for partnership debts. Their maximum loss is going to be the amount that they contributed. However, if the limited partners have acted as managers, that is, they've taken part in management and control of the business, then the limited partners will become general partners and they're liable. Revised Uniform Limited Partnership Act doesn't require creditors to know the limited partner's participation unless the participation in the control of the business is the same as those of the general partners. There are restrictions on the activity of limited partners so that third parties do not rely on their financial reputations in making the decisions to do business or extend credit. In addition, the Revised Uniform Limited Partnership Act has safe harbor activities for limited partners. These are voting on partnership matters, consulting with and advising a general partner about partnership business, being a contractor, agent, or employee of the limited partnership or of the general partner, and acting as a surety for the limited partnership. Finally, the limited partnership may be dissolved like a general partnership. Let's discuss limited liability corporations now, also known as LLCs. Limited liability companies qualify as partnerships for federal tax treatment, but have a benefit of limited liability. LLCs are also statutory creatures and require proper formation. The articles of the LLC must contain the name, purpose, duration, the registered agent, and the principal office of the LLC. In addition, the LLC must use the words Limited Liable Company or LLC in the company's name. Contributions in LLCs may be cash, service, or property. The owner of the LLCs are known as members, and an operating agreement governs the members of the LLC and their powers and interrelationships. Members are not entitled to compensation for services unless the operating agreement specifies this. Further, the operating agreement should specify how profits and losses are to be shared. LLCs are going to be independent entities and they can hold and own property in their own name. LLCs may dissolve upon the member's consent or upon a member's death, retirement, resignation, expulsion, or bankruptcy. Statutory law does allow for LLCs to continue if all the remaining members consent. LLCs are going to be distinguished from subchapter S corporations and limited partnerships. LLCs will properly be used more than these two forms of entities. If you look, we have a chart here detailing out how the LLC is different from our subchapter S corporation and our limited partnership. Finally, the newest form of business organizations are going to be limited liability partnerships, which provide limited liability and flow through. They're also called LLPs. These forms of business organizations are generally used by professionals such as your accounting and law firms. We finished discussing chapters 40 and 41 and 42. Let's take a look at some of the textbook questions in chapters 41 and 42. For chapter 41, please go look at questions number 7 and 15. When you get to chapters 42, I would like for you to look at questions number 2, 4, and 8. Jot down what you think might be possible answers for all those questions, and we'll come back and review in a moment. Well, let's see how you did on your questions. In chapter 41, let's talk about number 7. What did you decide? Hopefully you found that judgment would be for Marlowe. The bar had been purchased with the partnership funds and therefore belongs to the partnership. There was no agreement of the partnership that Eugene and his wife could acquire title. Let's now look over at number 15 and see how you guys did there. This question was dealing with the nature and extent of a party's liability. And the question was, do you agree? You should have found the answer was yes. All members of the firm are liable on contracts made by a partner for the partnership in the firm name if such contracts are made within the scope of the partner's actual and parent power. Hopefully you guys did well on these questions. And please feel free to ask me if you have any questions about those. Now let's look over at chapter 41 and let's see how you did on questions 2, 4, and 8. When we were dealing with number 2, we were dealing with the application of subchapter S corporations to aliens, the alternative forms of business organizations. Here, Alan had received inaccurate information about the use of the subchapter S form to a situation. One must be a U.S. citizen or a resident alien to use this form. He is neither a U.S. citizen nor a resident alien. The LLC form of business organization would have given Alan the limited liability he sought and the tax treatment as a partnership. This would have been the form to have been recommended by you. Let's see how you did on number 4. Here, regardless of whether Nurse Noyes worked for the hospital or the partnership, she was acting under the supervision of Dr. Means, and the partnership will be held responsible for the malpractice of an individual that the partner supervised and controlled under LLP law. However, under an LLP, only partnership assets and the personal assets of Dr. Means are available to pay a judgment. Thus, Dr. Myers and Mullen's personal assets cannot be reached. And finally, let's look at number 8. Here we were looking at the distinction between an LLC and a limited partnership, or also called LP. Generally, none of the owners of an LLC are personally liable for the entity's debts, while general partners in a limited partnership will have personal liability for partnership debts and liabilities. Limited partners can't participate in the management of the partnership except for certain safe harbor activities under the revised Uniform Limited Partnership Act, such as being an employee of the general partnership. All owners of the LLC may participate in the entity's management. Here, John is correct in his statement that the general partner of a limited partnership may be a corporation, but there is potential liability exposure if partnership creditors pierce the corporate veil of that corporate general partnership, because the corporation was a shell with grossly inadequate capitalization. Moreover, if a limited partner becomes actively involved in management, the limited partner could be found liable as a general partner. The legal cost then of organizing a limited partnership should be greater than the legal cost in organizing an LLC because of the need to file documents not only establishing the limited partnership, but also the documents establishing the corporation to serve as corporate general partner. It is less complicated and expensive regarding professional fees and organizational and annual maintenance fees for an LLC rather than a limited partnership with a corporate general partner. The limited partnership with the corporate general partner must file additional tax returns, maintain additional books and records, and comply with corporate formalities. A DeVal County exists in Florida, a state which imposes an annual intangible asset tax on the value of intangible assets held by a Florida resident as of January 1st of each year. The tax rate is $1.50 per $1,000 value. An LLC is subject to the state tax, while a limited partnership that is not publicly traded is not subject to the tax. If John and Amelia's entity will own significant equity, this tax may compel that the limited partnership form of entity be selected over an LLC. The decision on whether to use an LLC or an LP form is a complex one, sometimes turning on taxation matters. If taxation is not an issue, then the LLC form appears to be the most advantageous form of entity for John and Amelia's business. Hopefully you guys did well on answering these questions, and again, if you have any questions, please feel free to contact me.
Good luck with today's lesson.